Almost no country in the GCC can be truly food sovereign. Vertical agriculture is an idea that came about over the last 15 years. That has, for the most part, been a fucking disaster. Hey, little old India, only 1/6 of humanity, would be a, equally great investment opportunity. If you are building an agritech company, you have to understand what you're gonna be when you grow up. It's really funny now, 21 years later, to be like, yeah, I thought American politics was really toxic. And it's like, this weird kid from Texas is like, hey, I'm gonna do agribusiness. And everyone's like, what the hell? Life and material sciences might be a little under the radar right now, but there is a lot that is coming. Let it cook, as Gen Z would say. Any person really thinking about food security in the GCC needs to think in a framework that I believe has 3 parts.
Hello, my guest today is Mark Kahn. Mark is the co-founder and managing partner of Omnivore, India's leading agri-tech and climate tech venture capital firm, with more than $300 million under management and over 45 startups backed. When I first conceived of this podcast, Mark is someone I immediately wanted on as a guest. 1, Mark is never shy of an opinion or hot take, and 2, he's also just a fountain of knowledge when it comes to all things agriculture and climate related, as well as India's broader venture ecosystem to boot. We cover a ton of ground. We get into why he's not trading India's deep venture ecosystem for newer regional opportunities, how to build bridges between India and the GCC, whether the region can ever be truly food secure, and how on earth it is that a Harvard Business School grad from Texas can end up investing in something like a tractor marketplace in India. I'm super grateful to Mark for being the first guest on the podcast. I learned a ton from this conversation, so I hope that you find it just as valuable as I did. But before getting into the episode, Warren Buffett once said, the stock market is designed to transfer money from the active to the patient. And Lebanese-American mathematician Nassim Nicholas Taleb reminded us that you cannot predict, you can only get ready. Those 2 insights define today's investing environment. You don't win by guessing the next move. You win by preparing, cutting through the noise, and letting discipline compound over time. That's exactly what Sarwa delivers. Sarwa's modern platform is grounded in simplicity and lets you trade stocks, ETFs, crypto, options, and high-yield savings, all in one app. They keep your fees low, so more of your money goes to work, with minimums as low as $500. Sarwa is loved by experts, not just beginners. Whether you're a first-timer, an active investor, or a day trader, you'll join hundreds of thousands of users who choose Sarwa to grow their wealth. As a FWDstart listener, you get $200 when you open a new account with code FWDstart. All the details are in the description. And if you're chatting to the team, please do tell them that JB sent you. So, what are you waiting for? Get started in minutes and take control of your money your way. Sarwa is regulated by the ADGM, Financial Services Regulatory Authority. The information shared in this segment is for educational purposes only and should not be considered financial advice. Investing involves risk, and past performance is not indicative of future results. If you've ever tried opening a business account in the UAE, you know the drill. Endless paperwork, minimum balance requirements, and traditional providers that move at the speed of bureaucracy, shall we say. HubPay, however, was built to change that. It's a fully digital ADGM-regulated fintech platform that gives UAE businesses instant access to multi-currency accounts with named IBAN in 30+ currencies, payment links, payroll, and much, much more. There's no hidden fees, there's no minimum balance, and if you're like me, you're in a hurry, there's no waiting. It's amazing. So whether you're a startup who's paying contractors in Asia, or you're a scale-up managing suppliers in Europe, or even if you're an enterprise running treasury across multiple geographies, with HubPay, you can open a business account and become financially operational within a week. Can you imagine a week? No paperwork, no branch visits, no barriers. It's trusted by 1,000 plus UAE SMEs from tech startups all the way up to mid-market enterprises. So what are you waiting for? Open your HubPay business account today and get a 30-day free trial at wearehubpay.com/pricing and scale your UAE business with confidence. Mark, very welcome to the FWDstart podcast. Thank you so much for joining me today.
It's very nice to be here.
If we could start by actually just getting straight into it, maybe we'll get some of the backstory later on. We did have a conversation a couple of weeks back, which I found very interesting. And I'd like to maybe kick off with something that you mentioned then, was that you're spending more time in the Gulf of late, and that you're frequently encountering a particular question in that, okay, so your next fund is going to be maybe more MENA focused. And your refrain is, well, no, not really.
That is not the case.
Can you expand on why that is the case?
We are an Indian fund. Omnivore is an Indian fund. We are the largest, oldest, and most active venture capital firm in India focused on agritech and climate. I like to say that we're a climate VC with roots in agriculture. There's a lot of interesting things that can be done between India and the GCC. And for that reason, and for some others, I've been spending more time in Dubai and in the GCC more generally. But it's an interesting, it's an interesting point that whenever you're here, people sort of immediately assume you're going to drop whatever you're doing to pursue the incredible domestic opportunity. And while I acknowledge that there is one, right, and I see that there's a very strong opportunity to do venture in the GCC, in MENA more generally, and that even within the scope of what we do, which is to say agri-food and climate investing, that there are incredible opportunities. I'm not going to trade India for MENA. India is an absolutely fantastic venture ecosystem that is incredibly deep, offers quite a bit of liquidity, offers markets at scale. And what we are instead trying to do is find ways to build bridges between India and the GCC, between India and MENA, and create synergies that are mutually beneficial for Indian startups that are interested in bringing either technology outside or agribusiness, essentially agritech companies that are nascent agribusiness companies that are simply exporting fruits, vegetables, spices, food, right? Food ingredients, what have you. And so that's the reason I've been spending quite a bit of time here. I do see interesting things to invest in locally, but maybe that will happen in the future, but we're not doing that quite yet.
Do you think there's a misunderstanding about India's venture depth versus the GCC?
Oh, 100%. It's a little bit funny. I think it is a function of history and immigration. I think the fact that this region is so close to India and has so many Indians here, right, especially in the UAE, because of that, there's two ways that could go. One is all of those people here are super active about investing back home. But the other way that in fact plays out is that there's such a strong focus in the GCC. Whenever they think about abroad, abroad is the US, abroad is Europe, right? If you think about the large asset managers here, they're all fighting to get into these deals in the US and to a lesser extent in Europe. And the notion that hey, little old India, only 1/6 of humanity, the source of a huge amount of labor, right, both blue and white collar, would be a equally great investment opportunity. It's not that there's no investing, right? Certainly there have been significant investments from some of the largest financial institutions in the UAE, in the Indian startup ecosystem, in growth rounds and the like. But there's sort of a deprioritization of almost every overseas market in the GCC in favor of the United States.
Is that structural? Is there a degree of hubris?
I think it's. I think there has always been a strong linkage between the UAE, between the Kingdom of Saudi Arabia and the United States. And I think, the bleeding edge of AI, some of the largest startup outcomes in the world are in the US. There is no question of that. But I think India sort of gets a bit ignored, possibly because of its proximity, possibly because of, of the fact that it's sort of seen in a past tense, right, as a provider of very good chartered accountants, right, and financial and IT personnel. But all of that sort of is more about India's past than the kinds of incredible things that are happening in India's present.
Sure.
And so I'm hoping that changes. I do think it's not that there is no investment, but certainly when I tell people here, no, I'm very happy focusing on India, they're like, wait, but have you seen the local market? And I'm like, yeah,
Yes.
I have. It's good. It's
Yeah.
way smaller, right? Like it's India's $15 billion a year of venture capital investment. We have multiple decacorns that have gone public, right? We have possibly the most liquid public markets in the world.
This is what I wanted to ask as well, from
Like,
an exit perspective as
It's
well.
better
especially.
in every way. I mean, I would argue it's funny. I was at a conference in Europe last week, and I was sort of having a variant of this discussion with a group of European climate VCs.
Okay.
And I explained to them that, like, in India, you can take a company public if the revenues are, say, or let's say the valuation is, I'd say $400 or $500 million.
Sure.
And they're like, we don't even know what an IPO is, dude. Like, we don't know what that is. That doesn't exist here. India, in many ways, because of the long-only domestic investment combined with significant foreign international investment, has resulted in a savings and investment culture that reminds me a lot of the US in the 90s.
Interesting.
And the exchanges in India remind me of the NASDAQ in the 90s. To be clear, when I was in high school. Not like I have a super intimate knowledge of this, but basically the United States, through regulation, made going public insanely difficult in two waves, like the first being like 2002 and 3, and then again after the financial crisis, which is why you need dumb things like SPACs in order to go public in America. India never did that. It's always had an exchange that was open to medium-sized companies that wanted to go public, and so startups are a huge beneficiary of that. All of which is to say, it's a great VC ecosystem that doesn't take away from how good or interesting that MENA is, but it is a much bigger opportunity, and I would argue a much deeper set of kinds of businesses that are being built, right? Not just, I think MENA is very strong in fintech. I think MENA is quite strong in the sort of e-commerce consumer opportunity. And then when it comes to things like deep tech, or life sciences, or material sciences, or robotics, there's very little, right? Like it's still early days. And I think that will change, and I hope that we can be part of that change. But the interesting thing is, like, the Indian startup ecosystem, which earlier really was like B2B SaaS and the consumer opportunity, has radically deepened in the last few years, and has become quite interesting in terms of, hardware investments, right? Some nascent stuff in AI, fintech being incredible, the B2B opportunity being incredible. And it will continue to be our focus, even as we try to bring Indian startups into MENA and selectively look at opportunities here that make sense.
Do you think there's lessons that can be learned from that sort of exit environment in an Indian context, even as it pertains to, you mentioned there, the valuation at which companies go public? I mean, there's an obsession, definitely regionally, I think, with this idea of the unicorn, and the valuation has to exceed $1 billion. And obviously, venture returns necessitate that on occasion. But do you think is it unrealistic? Is that nearly I don't think limiting?
I don't think it's unrealistic, because I do think you need large outcomes to. There's always this thing about venture math, right? Where your typical VC fund, if they did it right, owns 10% at exit, oftentimes much less. And when you think about your typical VC fund size and the fact that these unicorns, right, are providing, one time the fund, right, hopefully, when they go public, I think you do need these outsized exits. And I think, SME exits really don't help much for a venture capital model. And I don't think the Indian public markets are very easy to replicate.
Sure.
Right? They really are the function of a fast-growing country that has an insane savings culture. And so I don't think it's like a copy-paste. But I do think that, there has been a real effort to get companies to re-domicile back to India, like the champions that have been built. There was a time where some of the most successful Indian startups were really domiciled in Delaware or Singapore. A good example, Zepto, Flipkart, and these companies are all flipping back to India, kind of recognizing that it's a better public market environment for them. And so, I think that that should definitely be a priority for the region as they build their public markets, making sure that their greatest champions are, domestically domiciled.
The next thing I want to talk about actually was a word that I think has perhaps popped up the most in my writing over the course of the past year, which is sovereignty. And if I have to write the word sovereignty again, I haven't done sort of at the end of every year, I do an assessment in terms of, the frequency with which I use particular words. And I'm sure that sovereignty is going to be right up at the top of that, whether it's AI, space, defense, food. It's nearly become like fetishized to a certain extent, I would argue. This idea of sovereignty and self-sufficiency, I think, especially in a sort of regional and a Gulf context. But when you look at maybe specifically food, the distinction can get slightly blurred, perhaps. I'd love to get your take on this idea of sort of food security and food sovereignty, and maybe how we're conflating those terms in a regional context.
So I think the terms are often conflated, often abused, right? Food sovereignty and food security are not the same thing. Food security is how you make sure that your country is able to feed itself with, while doing everything you can to reduce potential disruptions, potential risks, climate effects, what have you. Food sovereignty is what you can produce within the borders of your country. And I think these ideas are important to understand because there is a real desire in large parts in many of the GCC countries to accelerate food sovereignty. There's also a reality that almost no country in the GCC can be truly food sovereign, right? And sometimes the efforts to build food sovereignty wind up with disastrous white elephant projects that make no economic sense. On the other hand, some things are really, really smart, right? For the most part, there have been incredible leaps in food sovereignty in the dairy sector.
Sure.
Right. The Saudis have done a tremendous job in eggs. They've done a great job in shrimp. They've become an exporter. And certainly, right, in some highly perishable, right, fruits and vegetables, you can, with controlled environment agriculture, right, grow in the desert, right? My friend Sky Kurtz at Pure Harvest has been, a pioneer in this. But for the most part, I think any person really thinking about food security in the GCC needs to think in a framework that I believe has three parts.
Yes.
Right? The first part is the food sovereignty part, like the domestic production. And that really is two things. One, what can we produce in an economically logical, resource-efficient way within the borders of our country? With the caveat, the second part being, if we have farming communities, maybe we're okay with it not being totally as efficient as possible in order to preserve rural communities, farmers, farming way of life, traditions. Right? These are important trade-offs that people have to understand in agriculture. Is the notion of economic efficiency being the only thing that matters? Yeah. The reality in agriculture is it's never been the only thing that matters. And so agriculture does. There's no country that has perfect free trade in agriculture. I mean, there's a few, but very few. And so these domestic political considerations of, the farm lobby in every country comes into play. And so I think having an intelligent discussion, about what can be done in the UAE with respect to food sovereignty, the same in Saudi, the same in Qatar, the same in Oman, and then sort of asking hard questions about, okay, it makes sense to do it in dairy. It might not make sense to do it in meat. It certainly doesn't make sense to do it in grain,
Sure.
right? And that none of these countries can become, barring some, insane leaps in precision fermentation, right? And essentially biotechnology. All of these countries will be dependent on some amount of food imports for the foreseeable future. So figuring out what goes into the bucket of food sovereignty is the first step. And then accelerating those things. The second, I think, needs to be building bridges to geographies where, through investment and bilateral trade agreements, you can ensure the food security of your country, even though things are being grown outside of it. China has been doing this phenomenally well for decades, where they have made enormous investments in Latin America and in other geographies in order to build chains that link with their processing sector. And so I think that should be something that the GCC pursues very actively. That is something that is happening, right? The UAE is making investments in Africa, right? In turnkey projects where things get supplied back to the UAE, and other GCC countries are doing the same. The argument that I would make is that isn't happening much in India, or South Asia more generally, and I think it should.
Why is that?
Because I actually think, why is that not happening?
Yeah.
I think there's sort of a perspective that looks at smallholder agriculture and says, oh, God, so hard, difficult, lots of people, complicated, without recognizing how efficient it is, right? India is the world's largest producer of milk. It's the world's second largest producer of everything agricultural, like rice and wheat and sugar and cotton and fruits and vegetables and a million other things. And I think there's sort of a bias when people think about investment abroad that they're like, oh, we should do Brazil, right? Which is, the largest broadacre agriculture farming in the world. Brazil's quite far away, right? And looks at India, which has, by the way, built huge agribusiness companies on top of this smallholder agriculture ecosystem, and says, we don't know how to think about this. And I think that's a mistake. I actually think that you have very, very strong ties, obviously, between India and the GCC, and in particular the UAE. And India needs investment in its agricultural sector. Brazil's kind of good. Like it gets that. It gets a lot from China. I think there's a real opportunity to make meaningful investments in agricultural infrastructure in India, in agricultural processing in India, in sort of building and backing large-scale agritech and agribusinesses in India, with an understanding that they have a clear export orientation to the GCC, the UAE, what have you. That really hasn't happened, and I think it's a missed opportunity, and it's something that in a lot of value chains could make sense for the GCC.
You touched on Pure Harvest and Sky Carts there. I'd love to maybe talk a small bit about controlled environment, agriculture, maybe more broadly first, and then maybe we can narrow it down to the GCC context afterwards. So maybe just to set the scene, I guess, CEA, maybe the umbrella covers things like high-tech greenhouses, hydroponics, aquaponics, vertical farming. They all kind of fall under the umbrella of that. So I suppose in reality, it's kind of any system that's used to kind of optimize growing conditions effectively indoors rather than relying purely on open fields. I suppose if you zoom out, the track record is maybe mixed, you could say. At least I think in public perception, we've seen a lot of maybe high profile failures that have done, a lot to maybe tarnish the image of it. Plenty in the US context, obviously going bankrupt early this year, having raised $1 billion. SoftBank, Walmart, Jeff Bezos, etc. In Europe, we've had a couple as well. You've had Agricool, I think, shut down in 2023. I think earlier this summer, you've Jones Food, I think in the UK, I think collapsed earlier this summer as well. Infarm in Germany, relatively recently as well, which looked, super promising. Against that backdrop, what's your take on where we're at with controlled environmental agriculture today? Like, what parts of it are still fundamentally viable, and then what's still hype?
We need to be very careful when we talk about the bust in vertical agriculture and we conflate that with controlled environment agriculture.
Sure.
These are not the same thing. Vertical agriculture is an idea that came about over the last, 15 years. And the idea was that you could, using artificial lighting, grow plants, grow crops, primarily horticultural crops, fruits and vegetables, in places that it would not otherwise be possible to do so. In particular, there was a time where this was called like urban farming.
Yes.
Right. The vision was, for example, Aero Farms was like, had greenhouses, have vertical farms in Newark, right? And the notion was you have people in cities, and using vertical farms, you can grow food, right? Specifically, say greens or tomatoes or strawberries near the areas of consumption. That has, for the most part, been a fucking disaster. Okay?
Yeah.
Like, that has not really worked. And that is where all of these high-profile bankruptcies, right, that, whether it is Plenty or Aero Farms, right, or, there's so many.
There's tons.
That has been that idea. The unit economics of that idea has, for the most part, not worked. Controlled environment agriculture is way, way older than that. Controlled environment agriculture, right, are the greenhouses, the glass houses in the Netherlands. They are the poly houses in Morocco, right? This is not nearly as high tech, right? Most controlled environment agriculture, you have some pretty bare bones versions of controlled environment agriculture, which is we just put up shade nets, right? Or we just put up, poly houses. Most of them have some amount of drip irrigation. Some of them, in some of those, then you start adding cooling systems and the like. Those are very, very, very old and ubiquitous, and some of the largest horticultural companies in the world, right, use those systems. And those companies are, doing hundreds of millions of dollars of revenue. So I'd be very careful when we conflate vertical ag with this other stuff. And I think it's important to understand that if you look at something like Pure Harvest was always CEA, but it was never vertical ag, right? You know why? Because we don't need that in the desert. We don't need lights, right? There's no lack of light or heat.
There's plenty.
There is a lot. And so, we never really had vertical ag in India either, because we don't lack land, we don't lack heat, we don't lack light. And so, on the other hand, like the polyhouse sector, India doesn't really do glass houses. It's too much capex. But the polyhouse sector in India is booming. It has been for a long time. And so, I think you will see more and more controlled environment agriculture across the GCC, across the world, especially as climate change accelerates. But I think the unit economics of LED-centric vertical agriculture is quite dead right now. It's pretty hard. And it's also especially hard when what you're ultimately growing with all this technology is greens or, a strawberry.
How did we get swept up in it then?
ZERP, right? Zero interest rates, made lots of things make sense for a while. I also think there's, the whole hype cycle, right? There was a hype cycle in alternative protein. There was a hype cycle in vertical ag. Many funds backed lots of both. We did neither, thank God. But I think there was this real bullishness about revolutionizing food systems that basically failed to take into account, right, price, willingness to pay, and actual consumer desire.
Yeah.
And so I think that that we're all digging out from that still, and I think there, it's those two trends, right, especially for funds that doubled and tripled down on them. Right? Some of those funds are zombies now.
In terms of, you mentioned there that you avoided sort of buying into this particular hype yourselves. Were you presented with ample opportunity?
We were. I mean, to be clear, it was never in India the same way.
Extent,
right? It was never like there were 100 alternative protein companies and 100 vertical ag companies. That was not the case. There were a couple of each. And we actually, we didn't spend as much time on vertical ag, but we definitely looked at the alternative protein sector. In fact, we had a fantastic little summit in February of 2020. Okay.
Wow. What a time.
What a time. We invited Bruce Friedrich from the Good Food Institute, who was one of the leading thinkers of the alternative protein movement. It was a joint event between the GFI, Excel, the US VC that's very active in India, and Omnivore. And we had about 20 or 30 entrepreneurs there and really kind of dug into the opportunity. And I think ultimately, and on the other side of that with COVID, people got really bullish. And I think our perspective was always rooted in a couple of ideas that we had about what works in India and what doesn't. And one is a real aversion to copy-paste models from the West, right? There's a tendency in India sometimes to look at what happened in the US and say, okay, it's coming here, and therefore we should invest in it.
Yeah.
There were a bunch of juice companies, like cold pressed juice companies that people backed in 2015 being like, this is really popular. Surely it makes sense in a country that's very price sensitive, where there's an informal economy of juice vendors on every street. Right. Like, and thankfully we dodged some of those bullets. So I think we've always recognized that copy-paste models don't work. There was sort of a further recognition, and I was on a bunch of podcasts where I was kind of the villain, right? Like I played the role of the contrarian villain in 2020 and 2021 and even 2022, basically saying like India doesn't need alternative protein. And people are like, no, like this is so important. And it's like, not here. Okay. Like, let's start with the basics. Number one, right? About, roughly 40% of India is vegetarian.
Yep.
They don't want those products. And people are like, no, but they could eat them. And it's like, yes, but alternative protein products are for the most part mock meat. And none of those people have a taste for meat. So they wouldn't want a meat analog. They will actually find it disgusting.
It's a massive change in consumption pattern.
Well, it's a massive change of taste, right? If you're a vegetarian and you don't really know what an umami taste is like, many Indian vegetarians won't eat mushrooms because they think they're too meaty in taste.
Wow.
And so A, you have this vegetarian population. B, in India we use this one wonderful term non-veg, okay, to describe like eating meat, because actually the default setting of the society is set to vegetarian, even though 60% of the society eats meat. But you have to ask for it, or it's on a separate table, or it's never what you are automatically served.
Okay.
And so the other reality about the 60% of the population that is non-vegetarian in India is they don't eat a lot of meat. Many of them eat meat once or twice a week, or the role of meat in the diet is very supplementary, right? It's, you're served multiple dishes, and one of those dishes happens to have meat in it. The notion that like we have in the West of like, I'm sitting down to my steak and potatoes, and the center of the plate is a giant piece of steak, that is for the most part not the diet in South Asia, in India. And so first of all, you've got this huge vegetarian population. Second of all, the non-vegetarians don't eat much meat, right? And finally, and this was always one of my objections to the alternative protein movement, was it was so devoid of understanding about like economic power, right? And economic concentration. This idea that we should replace farmers with vats owned by multinationals was something that I just didn't like. Right. And I remember having an argument with like a leading thinker in this space. And I was like, listen, I eat quite a bit of mutton. Mutton in an Indian context is goat, can also mean sheep. But for the most part in India, it refers to goats. And I said, I eat mutton. The mutton I eat is raised by literal shepherds, like biblical style shepherds in Rajasthan. Okay. That mutton is fed crop residues. Right after fields are harvested. So it's like the ultimate circular economy. There is there's no feeding of sort of commercial feed, or very little. There's almost no usage of antibiotics or any medicines. These goats are fattened and then brought into cities and then slaughtered. And the entire thing is an informal economy that employs tens if not hundreds of thousands of people and provides livelihoods to them. And you're telling me that I should replace that by a vat owned by a multinational corporation. And it was funny, but like the guy was like, well, I really only care about animal welfare. And I'm like, I get that.
Yeah, sure.
When you admit that, it all makes sense.
Yep.
But if you care about, I don't know, people,
yes.
Okay? Yeah. If you care about, let's just say, farmers or rural communities or landless, right, shepherds that have been doing this since time, immemorial, like maybe that's not where we want to head. And so yeah, I mean, this is an old argument, but I was bashing people on the head about this, 5 years ago, and everyone thought we were idiots, and thankfully we didn't take those bets.
Sweet vindication in the end.
For now, let's see.
For now, that's true. We were chatting briefly about Pure Harvest, and when we chatted a couple of weeks ago, I think you mentioned that in part their success stems from the fact that they've adopted from inception a sort of agribusiness first mindset to things, as opposed to a tech startup, maybe outlook, and then sort of trying to retrofit thereafter. Can you maybe expand on what it means to take an agribusiness first sort of approach in this space?
So I'm a very big believer that one of the failures in agritech globally is a lack of understanding about end states. If you are building an agritech company, you have to understand what you're going to be when you grow up. And let me make a distinction here. I'm referring mostly to, tech-enabled companies that are engaged in agricultural value chains.
Sure.
I'm not as much referring to deep tech companies that are, producing a better robot. Though it applies to that to some extent as well. If you're building a tech-enabled, agritech, and you're working in, let's say, seafood, or you're working in horticulture, or you're working in grain, or you're working in cotton, or what have you, you should have a good sense of what mature, scaled-up businesses look like in your sector. And if you're not building towards something like that, you should ask yourself if you really have a clear path to success. The notion that whatever you call yourself, we're a platform, okay? It sounds nice, but ultimately you're going to have to be a participant right, in a value chain, in some sort of end state that probably looks like a digitally native version of what is there right now. And that could be you become a retailer, or that could be you become a trader or a processor, or a branded food company, or what have you. But if you first of all, if you don't know what that looks like, you should study the space you're building in more. And additionally, whatever you are digitally disrupting right now, eventually you're going to have to be a boring agribusiness, right? And hopefully that digital first, right, that digital first approach allows you to scale much, much faster than some of the legacy companies that maybe are 150 years old. But you're going to eventually compete with those players, and you're going to have to play their games. And so knowing what sort of end state you're building towards, I think, is very, very important. When we look at some of our portfolio companies in India, this notion of sort of agribusiness end states, right, or agritech to agribusiness convergence is something that we're always talking with these guys about. If you think about a company like Tractor Junction, which is a little bit under the radar, but we'll announce a big round quite soon. Tractor Junction is one of the largest platforms for rural vehicle sales, tractors and light commercial vehicles. They run the leading online comparison portal for people that are thinking about making these purchases. And India is the largest tractor market in the world. And has a huge market in commercial vehicles. They also run dealerships, and then they have a financing business. But ultimately, like when you think about the end state here is this will be the largest rural used vehicle dealership network in the country. And like people know what used car dealerships, used vehicle dealerships, that goes back many, many decades. Many of those companies are publicly listed. They have scaled. People have made great fortunes. But like you can say, oh, this is a platform. But really, really, when it goes public, what people are going to fundamentally understand is that this is a dealership network at scale. Right? That is the heart and soul of the business. The financing bolts onto that. The digital bolts onto that. But ultimately, that is what is driving that business. If you think about something like Dehat, right, which is one of the most successful companies that we've backed, largest farmer platform in India, right? I think ultimately a lot of the success of Dehat is rooted in the fact that it is quickly becoming the largest branded retailer for agri inputs in India. Right? And people understand retailing, right? Retailing is a logical end state, right? It is something that, think about the number of retail empires that are publicly traded, right? And so that is, right, the heart and soul of that agribusiness end state. And so I think it's important for all of the people that are building in agritech to have a really good sense of what that agribusiness end state is. Obviously, in deep tech, right, in kind of product companies, right, that still needs to make sense. But I don't think people have quite lost their way, right? They've always kind of known, no, I'm building a product company, and eventually I'm going to sell it to one of the OEMs, right? Or I'm going to sell it to, a large fertilizer company, or I'm going to sell it to a large agrochemical company, or what have you. I think for the most part, the product companies have been more focused. But I think when people have been building these platforms and marketplaces, some of them have lost their way because they don't really know what the end state looks like.
Can we take a step back? But before we get into the Omnivore itself, I'd love to touch a small bit more maybe about your background as well.
Sure.
Because maybe not the prototypical agri-tech investor in India wouldn't necessarily, maybe think of yourself, given your background as a UPenn undergrad, Harvard MBA, maybe could have been forgiven for going to New York and working in finance or something of that description. But instead you end up in Mumbai working for agribusiness and eventually then found Omnivore in 2011, 2010?
2010, 2011, yeah.
How does that happen?
Oh, I've always been weird. So I would say there's sort of two elements to it. The first is I never really had any interest in going and being a managing director of Goldman Sachs.
Sure.
Prior to Harvard Business School, I had largely worked in politics.
Okay.
And I kind of went to Harvard Business School because I decided I didn't like American politics anymore. Like I didn't see a future for myself in it. And that was like the first, there's this term with startups like pivot.
Yeah.
That was my pivot. My pivot was, okay, I don't want to do this anymore. This thing that I thought I was always going to do. I was in DC, I was in Philly, I was, helping to manage campaigns. I was a policy wonk. I was, advising elected officials. I was deep in it.
What was it about that? Did you become disenchanted with anything in particular?
I was disenchanted with it's really funny now, 21 years later, to be like, yeah, I thought American politics was really toxic. And it's like, yeah, God, did I? Wow, I was either prescient or I was just, I just didn't have the stomach for what was honestly, in retrospect, a much less toxic time. But I think memories fade.
Of course.
Right. And in 2004, when I was making this pivot, right, it was, mission accomplished, right? Invading Iraq on false pretenses, freedom fries, right? The notion that, because the French had not supported, right, the Americans in their folly, right, that we should no longer use the term French fries. I like, America's always been a little crazy, right?
Small bit.
But there was a version of this 2 decades ago that I think we forget now because the current circumstances are what they are, where I was really not comfortable staying in the system, and I desperately wanted to live abroad.
Okay.
I decided a couple of things. I decided I am going to graduate and I'm going to move abroad. And the second thing was, I think agriculture is kind of cool. And that had happened because in some of the political work and economic work that I had done, I had been first exposed to kind of food systems in California. And I was just like, this is so interesting, right? This is this intersection of economics and trade, rural communities, development, poverty, right? Globalization, right? Politics. And so that was what propelled me. Like I showed up at HBS and people were like, what do you want to do? And like, the guy on my right is like hedge funds. The guy on my left is like private equity. Someone else is, I'm going to work in CPG. And this weird, this weird kid from Texas is like, hey, I'm going to do agribusiness. And everyone's like, what the hell? Like why would you do this to yourself? But I got really passionate about it. And so, and then the third part of that was I had traveled to India many times in a personal capacity. Okay. And I got this idea, which is a whole story unto itself. Sure. And I got this idea. I was always very interested in I was that kid with the wanderlust and the National Geographics, the one who would buy, right, travel books for places I didn't have a ticket to.
Yeah.
Right. And so I kind of said, look, I think India could be an interesting place for me to work. And so I did like kind of internship projects there. And all of this eventually built towards moving there a couple of years after HBS, working for a conglomerate called Godrej, one of the oldest, about 150-year-old conglomerate from Mumbai, from the Parsi community, right, the same community of the Tatas. And working for a family of absolutely lovely, brilliant people. Like everyone in the family has gone to HBS, Stanford, Wharton, Columbia, MIT.
It's a nice pedigree.
Brown. Like those are the schools.
Okay.
Like that's
sure.
it. And very, very ethical. And I had gone to business school with one of them. And she pulled me into her family's, to help with the turnaround of her family's agribusiness company a few years later. And I spent about 6 years there, and it was a very successful turnaround. And that was what gave me some operating experience. And, and that was the beginnings of Omnivore. We started out as sort of initially a kind of a project around like, how do we think about corporate venturing and innovation, and eventually, kind of into this corporate-backed venture fund, which was our first avatar from 2010, 11 until about 2017. And then we kind of raised an completely independent fund in 2018. That was an $80 million fund. And then a second completely independent fund in 2000, which we launched in 22, vintage 23, and finished raising in 24, and that was $215 million. And so we're still running those two funds.
And that newest fund, is that the Agritech and Climate Sustainability Focused fund? How has your thesis evolved from Fund 1 up to Fund 3?
From the corporate venture days to the first independent fund to the second independent fund. Look, I think when we started, right, it was, I don't want to say it was naive, sure, but it was definitely ahead of its time.
Yeah.
I think the vision was, we were sitting there in a large agribusiness company, and people were coming in, and startups were asking us for money. Mm-hmm. And I had seen this in the few years before I founded Omnivore, right? That there was sort of no capital that existed in India for startups that were building in this space, because for the most part, the generalist VCs were focused on B2B SaaS,
what they know,
or e-commerce. And so we said, cool, we're gonna be the first. We're gonna back this off to the races. And I think we had a sense that there were opportunities in remote sensing, automation. I think for the most part, we were looking at people that were building hardware.
Yes. Okay.
And so it's kind of funny, like, when, because the deep tech, quote unquote, deep tech ecosystem in India, right, has really taken off in recent years. But we were doing hardware deals going back to 2012.
Wow.
Some of the first stuff we backed were hardware deals, were people building IoT, were people building, automatic sprayers and the like. And so I think we sort of backed the best things that came along that fit into this very, very narrow thesis. And for the most part, that's how we behaved. 2012, we started investing 2011, 12. So 2012, 13, 14, 15. And then when we came back to market and became an completely independent, that was when, quote unquote, Agritech in India had started to take off.
Sure.
It had started to take off globally.
Yes.
But in India, it had also, some of the generalist investors started participating in it, for the most part building platforms and marketplaces. Because, and I always link the history in India to the history of sort of the B2B marketplace phenomenon in India, which really starts in 2016 when e-commerce took a pause. So there was sort of a downturn that started in 2015 in Indian e-commerce that wiped out a bunch of startups. It was like it was sort of like a cataclysmic event in what had otherwise been an up and to the right process for many years. And in the wake of that event, some teams that had been part of some of the most successful e-commerce companies founded the first big B2B platforms, right? Uran, for example, being a very notable one, where they came out of Flipkart. And sort of the discovery of Agritech came as some of these B2B platforms decided to focus on, right, the Agritech opportunity. Many of them with absolutely terrible business models.
Okay.
And so when we came back and started investing again in 2018, we backed a mix of the kind of product companies we had backed earlier, plus some platforms and marketplaces, thankfully many of which have done quite well. But we're part of this overall takeoff of the agritech sector, and we're certainly the most active investor in it. Largely seed stage at that point. And so we had a very large portfolio in that first independent fund. Like, we had 31 companies.
Oh, wow. Okay.
From an $80 million fund. In retrospect, I wish it had been a smaller portfolio. I I think it should have been, maybe 20 to 25. And that was sort of a learning for us.
Sure.
But that was because we were syndicating, right? The ecosystem was hot. And thankfully, things have still gone very well there. But I sort of wish we had a slightly more concentrated portfolio with slightly larger ownership in our best companies. And when we came back to market, sort of like COVID happened. Okay, downturn starts mid 22. We launched the new fund. We're like, oh god, it's gonna be tough.
Yeah.
And thankfully, the earlier portfolio had done quite well.
Sure.
And people came in to back us to the tune of $215 million. And the biggest change that we made was saying, okay, number one, we are probably going to pivot from the seed to the Series A. And largely because Series A pricing in India compressed starting in the second half of 22 and early 23 and continues to be much more muted than it was in the stupid days of 2020 and 2021, but also in 2019. Like people forget that like the crazy valuations that we saw during the pandemic really started a little bit earlier. And like the pandemic slowed things down for a second and then boom. Free money meant everything took off. But it was building on a wave that had started earlier. And so we've pivoted to being largely a Series A or pre-A investor. We do seed much less frequently now. And some of that is also because there is kind of a glut of seed capital in India. There are so many solo GPs. There are so many, right, family offices that have entered the seed stage, micro VCs, right? And you have the multi-stage funds that have come heavily into seed. And so some of the largest funds in India. In order to kind of build early pipeline. And I think our conclusion from this was, cool, that's great. Let's look at this Series A where pricing has become quite reasonable relative to, traction and focus there. And if we go earlier, we go earlier. We still do for some entrepreneurs some of the time. But I think that was probably the other big change. And I think the other thing to point out is our bullishness about platforms and marketplaces has definitely diminished. There were too many of them funded from 2017 until 2022. And now when we do them, I think, and to be clear, some of those are excellent. Like Tractor Junction's great, Dahat's great, Arya's great. Like it's been a good run. But I think that when we do them now, our real belief is that you have to get the unit economics and the cash conversion cycle right from day one. And there is no point in building lots and lots of GMV that that doesn't have those unit economics and cash conversion cycles in it. And I think the other thing is, and we had incidents of this, but it wasn't broadly true. But I think there were a lot of agri-tech startups that were built in that time in India and Southeast Asia that sort of were able to show huge scale, but I think in retrospect, not a lot of value creation for anyone. Like it's very easy. The dangerous thing about marketplaces, right? The dangerous and terrifying thing about marketplaces is that you can generate GMV without creating a lot of value. Right? Like the example that I've always used that sort of become very real to me is, let's imagine you're trying to build a B2B marketplace and you raise a $3 million seed round. You can probably get loans on top of that equity, working capital loans, right? That will allow you to do, right? Let's take a multiple on that equity check, right? So $3 million of equity, you could probably do another $6 million, right, of working capital. So you can kind of play with that $9 million, and you can, depending on how many times you can rotate that $9 million, you can have a GMV that very quickly looks like 30, 40, $50 million. And the problem is then people were then giving the next round valuation on that GMV, right? Without really digging hard enough into where did all of this GMV come from, right? Because it's also very, very easy to go to existing market participants and say, digitize your trades with me, because like I get more valuation from it. but all you've done is become like a middleman, right? Taking out other middlemen.
Yeah.
And so I think that was a real thing, that a real problem in the Indian B2B ecosystem, that thankfully, as people have gotten a lot more skeptical, has, I think, largely kind of washed out. Like where people are doing B2B marketplaces today, there is a much clearer, right, source of value for the participants involved. Right, we see this with some of the people that we're backing now, like Simplify or Agrizy, which are really full stack CDMOs, contract development and manufacturing organizations. Yeah, they do trade, right? But the hook for them is the ability to fill the capacities of factories in India with more business. So they create a lot of value for those factory owners, and right, they create value for their customers with work around formulation, new products, and the like. And so, and I think we're pretty skeptical now about people that are just sort of, effectively using venture capital to build trading businesses.
I think we've seen something similar in the MENA context as well. I think
Really?
you're starting to see, I think, consolidation of the B2B sort of marketplaces, and it doesn't necessarily seem, it seems more enforced from a survival perspective as opposed to necessarily sort of, consolidating for the sake of, a land grab opportunity. Can I ask as well, you mentioned the fundraising process, doing that post 2022, interesting time to be doing that. Obviously, you have the track record and the pedigree and a couple of exits under your belt as well. Has the LP base kind of shifted over time to that end? Like you mentioned, the third fund, the framing is maybe slightly different to the previous two. Does the climate framing help, to be blunt, to that end?
I think it did. I mean, I think, and I think it's something that we're very committed to. I think if you think about a 22, 23, 24 fundraise, right, climate was not a dirty word at that point.
No, it was not.
I think it has suddenly, people are a lot more.
There's connotations now.
there are, but I think it's something that is not. I think it's still. It's a little bit funny because coming from India,
sure,
there's no debate about climate, right? Like that's the bizarre thing to me about the U.S.
Yeah.
Right. India is, aggressively working on climate. It is at the pointy spear of climate change, right? Indian agriculture will get badly mauled if efforts at adaptation and resilience aren't successful, and also like mitigation matters, and so but it's really funny. Like climate is not a political issue in India, right? Like there's no one in India on the right or the left who's like, yeah, it's not getting warmer. Right. There's obviously, India has incredible energy needs, but India is also throwing down solar faster than almost any place in the world. And so it's so funny to me how politicized this issue is.
So divisive in it.
Right. In the US. And likewise in Europe. Right. Yeah. The European debate is very different. Right. The European debate is not whether there is climate change. It is a question of what should we do about it and what price should be paid, and how much of it is on, our small country basis history, right? Or, how much should be on our agricultural sector, how much, right, we wind up with these, farmer strikes in the Netherlands. But it's a much more grounded and practical debate. The American debate is bizarre, right? The American debate is a discussion about like, climate is the most important issue in the world on one side, or like it's not man-made on the other.
Does not exist.
Fantasy,
yeah.
Right. And it's kind of hard to, in general, like that it's a hard issue to grapple with in the US because of this incredible divide. Right. And I think there is sort of a happy median, right? Which is to say, like, yes, there is climate change. We need to do something about it fast.
Yep.
And probably some of the things that we need to do, right, are, I don't think it's a bad thing, right, that the U.S., right, is working on, this is probably the statement of a kid from Houston, okay?
I can tell what's coming.
Right? But I don't think it's a bad thing that we're generally kind of working across the energy stack.
Sure.
What I dislike is where we decide that like, these sources like wind and solar don't matter, and that's
Yes.
insane. Like why would we unilaterally disarm, right? And take away some of these tools, right? And similarly, like I think there's essentially own goals, right, on the other side, like Germany shutting down its nuclear plants, right? Where France is humming along, right, status quo. I think we need a lot less dogmatism about this, and sort of a recognition like we need energy.
Yep.
There are a lot of different ways to do it. We should do the things that make sense. We should stop doing the things that don't make sense. We should clean up every source, right? But I am a very boring centrist.
I'm all for it.
Like I'm like the last centrist.
I'm all for it.
Yeah.
There's some of us out there, few and far between these days, it seems, but respect it nonetheless. I'd love to chat about life sciences as well, because I think that's something that you're more acutely, leaning into potentially in this fund, looking at animal health, bioinformatics, precision for fermentation, that kind of thing. Why now? What's changed that the timing is right for that sort of investment?
So I think it's a very India specific point. India has missed a beat on life sciences.
Okay.
If you think about where the US is and where China is and where and Europe kind of happily muddling along,
Yes.
right? It's not a bad thing, right?
It's what we do.
Indeed. India did not put the same emphasis on life sciences, and I like to think of it from a perspective of talent. 30 years ago, the best and brightest coders left India and moved to California. The best and brightest MBAs left India and moved to New York or London or what have you. At some point, that brain drain, that term, we used to use this term, brain drain, circa 2005, 2010, kind of stopped. I think as the Indian economy, right, really took off in the aughts and then continued in the teens, talent in India, and as the startup ecosystem took off, so it was no longer just about like working at Unilever for 30 years.
Sure.
More and more of the best and brightest in India stayed home, right? And some of this was also the challenges of immigration, and some of this was kind of a recognition that the upside that America offered or Canada offered wasn't as good as it used to be, right? Relative to a chugging, fast-growing Indian economy where you get to like be near your parents and be near your families and be in your community. And so for the most part, I think a lot of financial talent, managerial talent, tech talent started staying back in India, and and that has really continued. There is still obviously a lot of emigration. But I don't think it's anywhere near, especially with respect to elite talent.
Sure.
It's not what it used to be. That those aspirations have changed. But life sciences in India continues to hemorrhage talent. There's a bunch of reasons. One is that India does not, while India has insanely great undergraduate education, because it is such a nightmare, right, to get through those processes, such an incredible talent selection. The postgraduate education in India isn't quite at the level of the IITs, if you will.
Sure.
And so a lot of people go abroad for their masters and PhDs. The best and the brightest in India right now. You have exceptions. The Indian Institute of Science near us in Bangalore is one. But you have a lot of people that head to, whether it's Cambridge, Massachusetts or Cambridge, England, okay?
Yeah.
Head abroad for their PhDs, and then they stay there. And very few of those people come home. And while India has a very strong pharma ecosystem, actual biotech is still dominated by the players that dominated it 20 or 30 years ago, and there were very few of them. And so you haven't seen this same kind of life sciences takeoff that, for example, China built over the last 3 decades by encouraging its diaspora, the best and brightest of its diaspora, to come home. And so that is something that I think maybe about 5 years ago, we started saying, look, we want to do something about this. We want to start helping those entrepreneurs that are coming home or that never left to provide capital to life sciences, because it is so critical for India's future. And it's so critical that we build this ecosystem. And that has gone beyond just capital, right? We've launched a nonprofit together. Nonprofit sounds funny. An organization in partnership with Nucleate.
Yes, so it's BioWave.
Called BioWave, with a lot of support from IndieBio, right? Nucleate, for folks that don't know it, is a organization of postgraduate, so graduate school students who are interested in bioenterprise. It is not an Indian thing. It is like a Harvard and Yale and Stanford and Oxford thing. Okay. So it is an organization of these students, largely in Europe and North America. India, of course, has a chapter. And the goal with BioWave is to bring more and more capital to back life science startups in India. And so we started by doing deals ourselves, but now we're building this larger, right, organization to really drive this ecosystem, to encourage entrepreneurs to come home, to support those entrepreneurs that are there, and to make people aware of the leaps and gains that are being made in the Indian life sciences sector, because otherwise it definitely flies under the radar. But by the way, hardware and space tech was totally under the radar 5 years ago, and now it's not. So our view is that like life and material sciences, right, might be a little under the radar right now, but there is a lot that is coming.
Give it time.
Let it cook, as Gen Z would say.
Let it cook. My God, clip it. That's going to be in the introduction. I can guarantee you that. Maybe I want to talk about exits a small bit as well. So I'm thinking of, is it Aruvaka Technologies?
Aruvaka.
There you go.
It's okay. It's okay. It's a Telugu word describing a weather pattern.
Okay.
I'm not sure an Irish kid needs to be able to pronounce that.
Unlikely.
We can go to Andhra Pradesh and ask ask them if they can pronounce properly the Irish Prime Minister.
There you go.
Right? That's the flip side of this.
We'll do it. Lock it in 2026. We'll carve out the time and we'll set it aside. But that was super, super interesting when I was reading about that. Did you guys first get involved? Was it back in 2013?
No. It was an early corporate venture investment in a young entrepreneur named Sriram Ravi. Sriram had worked in the semiconductor space.
Okay.
And was a sort of a brilliant hardware engineer. And at some point he had sort of quit his multinational job and gone back to his small town in small city in coastal Andhra Pradesh, and had started working in aquaculture. Basically, like, there's a long story about it that he used to tell about how, like, an uncle of his had lost a bunch of money in fish and shrimp farming, and he had decided to kind of in a shed build some IoT tools. But that is true.
Yeah.
And he had sort of built a prototype, and he had a couple farmers using it, and we saw it, and we thought it was cool. And this was in our days where I think we were like, okay, this is the kind of innovation we want to back.
Yep.
And ultimately, about 5 years later, Nutreco, which is a Dutch multinational and basically the leading aqua nutrition player in the world, decided to do their first ever venture deal by investing in Aruvaka.
Oh, wow. I didn't realize it was their first.
And then ultimately acquired it,
Yeah.
I guess 3 or 4 years later.
And you guys, what was your stake?
We owned like 30%. Like, it was an enormous stake.
Wow. Okay.
Because, we had come in when the company barely existed. And so that was an excellent exit, right? And it became kind of the digital arm of Nutreco. And it had really scaled up. It's interesting. It had scaled up not just in India, but the biggest chunk of the business was in Ecuador.
Really?
Ecuador is a shrimp powerhouse.
No idea.
The best shrimp, the best tasting shrimp. Well, I mean, if I say this, there are going to be some Indian shrimp farmers that are going to hunt me down.
That's a big claim, Mark. If you want to roll back on that one or commit.
It is what people are saying. Okay. People are saying that that the shrimp grown in Ecuador are the largest, cleanest tasting aquaculture shrimp, and that's kind of the market reputation.
Sure.
And so you have farmers there that are quite large, that are willing to invest a lot, and that bought a lot of these systems that Aruvaka made. And so ultimately, Aruvaka was acquired by Nutreco. It was a great exit for us. And yeah, it helped sort of validate the thesis that like you can build global tech from India.
Yeah.
And we see this in a lot of companies that we back now, like Nico Robotics, right? Which is kind of I would say a little bit similar. Jaisima is definitely from a less rural background.
Sure.
Okay. He went to Carnegie Mellon and he worked at BlackRock.
I see.
For many years in New York. But he moved back to India to kind of bring tech to farms. And it's interesting, he originally worked in drones, but drones were more or less illegal in India until 2021. Okay. And so he quickly pivoted to terrestrial robots and has built the lowest cost robotic platform in the world and arguably one of the best see and spray systems in the world. And he started out commercializing in India, but these days he's selling like crazy in California.
Wow.
And so this whole thing of like build in India for the world is quite real. We've been doing it for a long time. And we continue to back founders that are building tech in India for the world.
From an exit perspective, what do you expect the more sort of natural outcome is? Is it, I guess there was a good example as far as your sort of agribusiness convergence theory there, and that's sort of a natural buyer for a business like that. Do you expect it to come via public markets? Is it acquisitions from larger agribusinesses?
I think it's all of the above. Okay. I think that in India, there are like 3 paths to exit. Right. One path is M&A.
Sure.
And I think that's largely going to be for product companies. I don't think a lot of platforms and marketplaces can be acquired.
Makes sense. Yep.
Right. There are very few people that would want to.
Yep.
You could imagine a large farm retailer being acquired, but I think that's more of a stretch.
Sure.
The second, right, is this whole space of secondaries, which has really, really taken off. There are more and more great players in like secondary funds that buy out VC positions, recognizing that with the time-limited nature of Indian VC funds, right, or any VC funds, that there's an opportunity to, buy those assets and create DPI, create liquidity for those funds. And that those funds are willing to sell them, and sometimes at a little bit of a discount, making the model of secondary funds very viable. And there's also other forms of secondaries, right? Just bilateral secondaries, right? Some company is raising a pre-IPO round. It's super, super hot, right? They're raising $100 million. There's $200 million of demand. Great, you have a secondary, right? And then IPOs. The first Indian Agritech IPOs will be happening over the next, I think, 24 months. And yeah, I mean, the nice thing in India is the public markets are very good, both for taking things at scale public, but also for taking deep tech public, right? There was a very successful IPO of a drone company, mostly a defense-focused drone company, but a drone company that was many times oversubscribed. And so I think we see the potential with product companies as well, right? If they are profitable to take them public. And so there's a lot. I think that's one of the nice things in the Indian market is it's a huge M&A destination. There's deep secondaries, there's deep public markets, and that creates a lot of liquidity and a lot of opportunity for exits that I think that many countries wish they had.
For sure. One of the last things I want to ask you about is this idea of value add. And I'm particularly interested in this in a sort of an agri-tech context as well. It's probably one of the most overused phrases. I think there's debates regionally about exactly
everyone keeps playing the same Vinod Khosla clip.
I was just about to quote it.
Right?
You've ruined it.
I'm sorry, man. It's that ubiquitous, okay?
It's literally just about, I have it right here. I was going to quote it to you. Yes, most VCs add 0 value, some add negative value. What does value add look like for you guys?
I think many sectoral funds add value.
Yes.
And I think it is very different than the value that is added by generalist funds.
I was going to say naturally, yeah.
And so, and my sense of Vinod's quote was that he was really talking about like the pure money funds. Maybe he's talking about everyone, but I think if you took a sample of Omnivore portfolio companies and said, has there been value add? I think the answer is yes. And I think the answer is there has been value add in terms of actual business, right? Because we come with a global network in agribusiness. So we've been able to help with strategic partnerships. We've been able to help with literal, B2B business overseas, right? I went to Germany last year to go help a portfolio company ink a deal for exports of of an innovative biological product. Wow. I think that we've done and we've also built Omnivore with people from the sector. Like, one of the things that we always say is that you want us on your cap table because the people that are going to be working with you are not generalists. They are people who have been in this industry, that have built in this industry, right? And we have some very, very senior people attached to Omnivore. For example, Dr. H.K. Banwala, the former chairman of the National Agriculture Bank in India, right? We have the former head of Bayer Seeds business. We have the former head of the second largest dairy and food processing company in India. And so we have these people as advisors and supporters for portfolio companies. And I think it adds an incredible amount of value and perspective and connections and support. So I think it's somewhat of the way that we're built. I also think that we have a culture in Omnivore of rolling up, because we started out so small and so early and everything was so goddamn hard, that like we got very used to the idea that you roll up your sleeves and you dig in. Mm-hmm. And sometimes we find it very frustrating when we work with generalist VCs that don't do this, right? That are like, yeah, it didn't work out, it's fine. And it's like, wait, we haven't done the hard part yet. Like, we're good at this part.
Yep.
So and we've been good at actually turning around. I mean, listen, the story of Aruvaka is, before it was a great exit, it had 2 weeks of cash in the bank and almost shut down in 2016. Wow. And there was that part of just digging in and making this connection to Nutraco and like encouraging a pivot from the domestic market to overseas. And I think Omnivore is good at this.
What are you most excited about?
I mean, the thing I'm most excited about sitting in Dubai is trying to build this food bridge and this agri-technology bridge between India and the GCC. I think that is, if I'm going to be on this podcast, that is what I would say I am most excited about.
We'll clip it. Mark, thank you very, very much. Appreciate your time. It's great having you on.
Being here.
Amazing.